So for tonight's class, we're going to be talking about low risk and high reward charting. So I've noticed that a lot of traders, they're not very focused on like the support on a trade to look for the upside. They're focused on the breakout and then catching that. So one thing that Jarvis and I have been very big on with our alerts and also trying to help you guys throughout the server when you guys ask questions or want feedback, I'm going to give a quick visual example as I explain this. So like with snow, when we're talking about charting low risk, high reward, the first thing that I tell people or that most people will speak on, you're buying calls where you want to see a level hold before you catch the move back to the upside. So with the idea of a low risk, when you're buying calls, in which this is going to happen every situation, or it could happen, but you have to understand the probability with the idea. How many wins to losses will this return give you? And is it in your favor with moving long-term doing a strategy like that? So when looking at a lot of plays, a lot of people will buy on hesitation or the expectancy of the stock pushing higher, which is fine. Like that's a valid trade. A lot of people that scalp, they're quick in and outs within 30 seconds to a few minutes. They use the breakout to catch those and then leave the runners to run higher. When I trade, and along with Jarvis as well, we're focused on what's keeping it from going lower. We're focused on the zone that gives us the lowest risk, because when we do play and enter, whether it's light sizing or high sizing, we're getting calls at a support zone, which literally, like, you call it a support, it's there because there's buyers. There's always presence of volume that keeps the pressure of price action going upwards. Until that actually breaks and gives you that like conviction of I got to get out, you got calls at the bottom where the strength should be, and you're not just hoping for it to be there. You know, historically it's there. Going off the breakouts at any point, this could go, but when is it really going to have that push going up? Using supports that have multiple bounces compared to just the high breakouts, it's about the low risk, high reward, not just the idea of I'm just going to get in because I want to catch the move before it happens. We're just buying where it's safer for risk to reward. There's no idea of like, this is the right strategy, buying the breakouts the right strategy. You do what fits you as a trader. That's the biggest part about why you have to learn more as you grow with this. So you understand there's more aspects than just one thing you've seen from someone. There's multiple ideas out there you can try and correlate, and it may fit your style better than what you may have learned from someone else that has a strong suit in a specific area with trading. So when doing this, like I'm going to keep repeating this just so it stands out, but like low risk at the bottom with calls, you're looking at a heavy zone, buying pressure volume. Someone said I used to do that and have been clapped many times just because of the breakout. The breakout. That's why, like, that's how I used to trade. And I'm not saying it's bad, but for my style, I'm very big on like waiting for the best setup. The fact that playing stuff off of heavy zones on the bottom with calls, speaking on risk to reward, you can easily have, say, one win off these levels holding, whether it's the rejections with price action coming up and then sellers hit it and push it back down. The idea of possibly having one win that will outweigh 3 to 4 losses, 2 to 3 losses, because you're understanding the fact of, say, I got to zoom out a little bit. So you're playing this double top. A lot of people, they're going to see the price pushing, they're going to see it pushing again, and then the very next day it's breaking out. So they're going to more than likely going to anticipate the volume's going to stay heavy. It's going to push upside more. This could break that previous high, and this could fill the gap. So they're buying there out of the anticipation, not really understanding, okay, if this rejects, where am I really going to sell? Because then when you break this down, look at all that you're going to be seeing on the downside as this comes back down. Are you really going to want to sell, or are you going to want to wait and just have that reaction of, I want to see how this heavy support underneath holds, so I'm going to hold this position. If that breaks, then my play is invalid. If it bounces there, I can keep holding for the upside to hit again. When you're focused on possibly buying on a pullback to this area instead of just buying the breakout, you have two alternatives. A lot of people like the basically, I don't want to say force, because that's a lot of styles for people, is buying the breakout. But you're basically putting yourself in a position of, okay, if I size this heavy, if I size this much, what's my risk going to be and where am I going to cut this trade? Because out of like hindsight, basically, if this does fail this support, it can always bounce back up. There's always going to be another heavy support that you can have charted, and you're going to see the visual of it before even entering in the initial start. You're going to understand, okay, I have this level, I have this level. And if I'm buying the breakout, I can't risk too much just in case it consolidates here too long and the theta catches up to me. So you're using the strategy of low risk with the way that we keep the charting the way we do. There's multiple people that they want to catch the dip and then ride it back up. I focus on the same way that scalpers or just anyone that trades intraday with the pullbacks and sends. I watch for those on the larger time frames, whether it's the 30-minute zoomed out or the 2-hour, the 4-hour, and the daily. I'm trying to catch the bigger move on the larger frames, which shows heavier zones, heavier support, heavier resistance, because going off price action from a wider stance of time frames, it's heavier if there's repetition, if that makes sense. Over the years, that same spot has held multiple times or it's rejected multiple times. So it gives you that bigger perspective of this level is going to keep acting in correlation in the current price action of the stock. So using the zones on the bigger frame, for me, when I'm using snow as an example right here, I'm focused on the here and now. If you look back, this just basically lower highs off the previous all-time high for snow. So I know that individually, going off the larger zones for like if I'm looking at upsides when you're in the play, you're just focused on the main points. You're just focused on the main areas if you're playing that move to the upside. Same goes for when you're charting for whether it's a dip buy or you're like trying to picture, okay, if this does break out, where is my reward going to be with this trade if the gap fills? What's my risk possibility? So you're basically using these zones in correlation with, okay, I enter here, my position is this total amount of money. If it drops to this price, my contract may be down so-and-so amount, maybe 30 cents per contract, that's $100. So you're down 30% overall, basically. You can I keep saying that word. You can use that information to put yourself how to identify a rejection versus a reversal. So I'll, just like with every strategy, nothing is going to work 100% of the time. The question was how to identify a rejection versus a reversal. No strategy, no system is ever 100%. It's only 100% if you execute on both the winning side and the losing side to what you were basically risking overall for the trade. If you follow what you wanted to do, then the plan is basically working because you stuck to this percent loss, this amount of money lost. So when trying to calculate the rejection or reversal, you're honestly just trusting the zones. There's no emotions involved when you're using price action. You're using literally like algos on a computer. You're using zones that respect price action. So there's no emotions of, oh, is this really going to work? Should I trust this? You just have to trade off the zones and use that to size properly with your position for that matches your portfolio size. Because in reality, say you do play this double top for like a rejection for puts or something. I'm on the 4-hour right here. So if you're trading, a lot of people don't trade in the 4-hour, I would say. So I'm just gonna go down to the 1-hour just to add a few more candles. Because most people they're in the 5, the 15. For me, I'm looking at the larger frames because I want to know those zones. So hypothetically, say you get puts up here, your risk is basically a breakout, and you're saying to yourself, okay, so this didn't have that reversal, it didn't reject back down in my favor, so I can cut this at any time that I'm basically like content with, I would say. If you want to use a historical level as a level, if this breaks, I have to get out. But when getting put to the top, vice versa with calls at the bottom, your risk is right in that area. Like this is the last level if you're chasing calls that has to break for that gap fill. So if your inputs at the top, your risk is already lowered because if you are wrong, which not all breakouts happen, but also not all double tops come back down. If you enter that with puts and it fails, you're basically selling right away. But if you're in calls and this fails, where are you really going to trim when you know, oh, I can afford to hold a little bit longer? I want to see if this can curl. Like you're basically giving it time. When you're in puts, you basically are putting everything against you. Nothing is in your favor when you understand if chasing calls, there's a gap fill to 189 a share, which is literally a $5 push on the stock. So are you going to hold puts that long and just wait to see if it rejects up there? You're more convicted to follow the plan with a low risk input, even before you enter, just understanding the concept of what could happen. With calls now, what if a reversal doesn't happen? It breaks downside. It's the same strategy that you'd use with puts to top, basically. When you're looking at the zones on the larger frame, even if you're on the 15-minute and the 30-minute, you can use this strategy on a smaller frame. Like just the day of 5-minute candles, maybe you're on the minute candles. It's all the same, but you have to realize the larger frames that you use when charting this way and following plays, it's heavier on price action. There's more of a history that's holding this in that zone, in that consolidation to keep the buyers present at the support or to have sellers hit again when it hits that resistance. Does anyone have any quick questions or anything? It's not, I don't want to say difficult to understand, but it's literally you trust the chart. That's the whole purpose. A lot of people, they follow volume, use volume with heavy zone to see if that increases, like when that zone approaches. You can use other concepts to like put into this, or at least try it for your own personal repertoire or whatever you want to use it for, because it does come in handy. And for me, when you play contracts that are cheap, you can afford to hold, you add a week or so of time or a month of time, the chart can play out. And when the chart plays out, you can trim runners, leave runners, put a stop loss and raise it as the stock moves in your favor. Any questions about snow or any questions at all before I give another example? Can you help me? Oh, here we go. Now they're coming. Can you help me how to use zones, make my entry, how to trust them? Okay, so let me use another stock as an example for that question so I can slowly move along. Let's go AMD. Okay, so for this question, she's asking, can you help me how to use the zones to make my entrance, how to trust them? The hardest thing about whether you're a scalper on the 1 minute, you're an intraday trader on the 5-minute holding for a few minutes, you're a day trader on the 15 or 30-minute, or you're a swing trader. Every time frame has zones available for you to find the chart and use in your conviction, basically. But trusting them, it's not really the fact of you're entering and you're telling yourself this is going to work. This is the level. This has to go in my favor. It's not possible for me to lose on this. Going in and realizing the risk that's associated, and you're understanding that you're buying a zone. Like price action history respects this as a price on the stock. Whether it's pushing upside, it rejects it. Whether it's dropping on the downside, holding the support. So you're going in off of historical repetition, or like a repeating sequence, basically. So it's not more so like, how can I trust them? The way I think when I enter plays like this, and I'm going to explain why I entered AMD from today, it gives me the calmness of knowing I'm entering at a point where if this doesn't hold, and I'll slowly work my way into AMD, if this doesn't hold, it practically has a gap fill to 117 area. Like I get the whole point of like it could come down to here at roughly 121, but this is all a zone practically. Up, down, up, down. Now that it broke above, this historical rejection in this zone that finally broke after 2, 4, 6, about 8 days of straight up, down. That should hold as support. So you're putting that in your favor. You're buying calls where it should hold. So as this slowly curls, other people are going to get attracted to, oh, AMD's curling, I should start getting calls, I'm going to buy shares. You're going in off of that low risk possibility. using trust, you know that AMD can have a massive move pretty quick, but do you trust this enough to start a position for calls that expire tomorrow? Can you afford playing next week right at the money? Can you afford playing next week out of the money, a month out? That's when you have to correlate how much can I spend per contract and then how many contracts can I buy. Once you know all that, you're trusting the fact that if you're wrong, you already know you're going to lose X amount or like a rough estimate of X amount on the contract. For me, the entry, we got in practically close to low on the day, so we held. And if we wouldn't have held that area, I kept mentioning, I think it was 122.44 area. We wicked below it, but held above. And I was waiting for a close with another candle. That was our sell point. The contracts, I think, were around 0.65. We entered at 0.75 and it just consolidated at that area almost all day until the run up. If we would have got the week of contracts, that theta decay would have killed the premium. We would have been down triple of what we were actually down for next week's expiration. So that's why I like to use like how fast does the stock move? Okay, when we're at the zone, it kind of holds for a few days and then it goes the opposite direction. So I wanted to enter and add a week of time or 2 weeks if I need it, because I'm trusting the move that's going to happen based off this level. My trust is in the chart. It's not me just saying this is going to happen. I'm going to be right. I understand the risk, so I'm not worried about losing if I follow my sell point. So there's the low risk with charting. I'm basically rewarding myself the gap fill. I can trim along the way. If you're focused on the main levels along the way, like the PTs you want to hit, I'd say roughly around here at 128 a share. And if we break that, it's practically a free run up to 130. And then I have a zone at roughly high of the day, but the previous high that had a fake out at open 3 days ago. So the downside is literally right here. The risk is so small. The first PT is roughly a $4 push, but you can trim along the way if the move is in your favor. First PT, second PT, now we're at the triple top. You should only have runners at this point, because if the breakout happens, those runners are going to make back double, if not the same profit that you already trimmed along the way. That's what runners are for. When people are chasing this breakout, if they're wrong, they're going to lose, but you have runners, or you're just holding a position that's already up. I mean, I don't want to like exaggerate this, but it's just to say 100% to 200%. Even though if this really happened, it'd probably be up roughly 500 to 600. So you comprehend, oh, this can pull back. I'm fine. But if you would have bought here a slight pullback, now you're like questioning, where can this bounce? I'm trying to show you guys my like low risk, how I wait for stuff to align, and then I enter. I'm patiently waiting. I'm not rushing the play. So I'm trusting these levels. It's almost like, can we still go long or too late? Wait for a pullback, but if it doesn't pull back, I can't really say anything. That's another thing that's very difficult. Seeing stuff run and you want to catch it, but it's always like, what if this pulls back right when I enter? Like, could this really keep going? I am not really interested in playing unless we dip and then I'll write it back up. Or if we have a nice few week consolidation for rejection, play puts on the downside. But I'm just waiting for the chart to show me something. How did Rippy get the bounce on Tesla after the fail on Tesla bull flag? So he was watching the VWAP on the Tesla bull flag break, I'm pretty sure. But let me pull up the chart just to make. I'm not sure if he said that or not. All right, let's see. Let's go to 5 minute. Okay, so I don't usually use indicators on trading views. So let's see if I can figure this out. Yeah, it's my Weeble still open. Nope. You guys are probably like, this dude doesn't even know how to work this. Yeah, I don't know. Okay, I'll have to look into that, but I'm pretty sure. I think the blue is the VWAP, like the one that everyone else should have. I don't know what this stuff is. He bought off the VWAP. That's what he did. So he was holding based off the. I mean, everyone knows what the VWAP is. Yeah, okay, so the blue one is the VWAP. So yeah, he was literally sizing in based off this holding. The VWAP is the main indicator people use for intraday trading, open pullbacks. It's the main price action movement indicator. So yeah, he did that. I think he was going to sell on a close below with a candle. That was going to be his trim, but he added there only because of that reasoning. And of course, he trimmed on the way up, and I think I don't know when he sold the entire position, but it got stopped out, I'm pretty sure. Blue is VWAP up and lower bands. Okay. Um, can you show how to draw zones? I want to improve my charting skills. Just show us one or example of how you draw. Let me do it on Tesla. How do I get rid of this now is the question. Yeah. Okay. This may be hard to do because it's basically breaking out. I mean, we can kind of do one. Tesla's been on a rampage, so its volume is literally like wherever the volume's at, it's going. Chart hasn't been respected because it's just breaking out right now. So I'm just finding stuff right now, like just looking for zones. There's a nice rejection that happened almost 3-4 times slightly. Once it broke above, it kind of held that area as a support. So this entire zone is going to be heavy on Tesla. And it's currently rejecting. Not saying Tesla's going to drop, but low risk, high reward. That's a possibility, but volume can easily take the stock wherever. And if I use these areas, this is kind of a gap, but roughly around here, you can put another support. Like this is the gap filling the downside for Tesla, probably. It had a slight rejection when it tried contesting it. But yeah, that's it really. Does that answer your question a little bit, Rocky, or is there more you want me to elaborate on that? If my zones are 4 hours and 1 hour, I can make my entry in 5 minutes. If you can pinpoint a zone, you can trade those areas on the 5 minute, the 1 minute, whatever it could be. What I tend to do if I'm in that idea, I'll enter based off the larger frame, whether it's like the 30-minute or the hourly. I try not to enter on the 2 hour plus. The lowest I'll go is usually the 15, but I'll see if there's any trends forming, if there's a pattern in here. And you can see there's a slight support in this area that we're currently approaching. Let me change the color on these. So I chart the same way on the smaller frames to kind of like a conviction, gives you that, like, I'm going to hold and see what happens if you're already in the trade. But we had a slight bounce, well, rejection that's now going to act as a bounce once it got above. So it could hold here and curl back up. But then I'm looking at the fact of lower highs in the process. And then you start looking at higher lows. So this is like squeezing. So then I just start charting stuff like, is this reasonable? Could this actually be something? Larger frame, all I need to know, this area is going to reject if it follows price action. That's what I use the larger frames for. Just like when I'm on the 30, the 15, if I zoom out, I can't see all the way back where this yellow is. So keeping it there, I just have a visual, like in this area, watch for a reject. I have to watch for price action to have selling action over buyers. And then I use the smaller frames, like what trends are forming. I know in this zone, we usually reject. Are we forming a bearish formation, whether it's a pattern, lower highs, maybe it's a inverse cup and handle, I mean, whatever it could be. What is a good time zone? Oh shoot. What is a good time frame zone for swing trades? Swings. When I do my 2 months out, I can give an example. When I do 2 months out, I'm usually 4 hour or the daily half the time. It just depends on like the price action that happened historically. Do I need to be this large out on the time frames, or like all the zones I need to see, they're just easily in the hourly, if that makes sense. So I kind of just go with the chart. With forward, this would be a good example. So like for this swing, if you're just looking at this and you understand patterns with lower highs, same support area, trying to like squeeze, you see this pattern without me really even having to draw it. It's not concise. It's not perfect, but it's squeezing. So when I entered this on the larger frame, I knew, okay, if I enter a swing, it's going to take a week or so, 2 weeks to have that momentum up. Forward doesn't move that quick. So I'm looking at this as, okay, I can't just get weak of if I try and catch this downside. Every time it comes down, it bounces. Let's roll it every time. So every time it comes down, it bounces, it holds. So I'm going to give it a few days to hit, hold, hit, hold. So when we got in this area, we pulled back, we bounced. I'm watching it for a pullback for a double bottom just to hold. Because if it fails, I'm selling right away. I'm adding 2 months, 3 months expiration because it may need time. And then I just ride it up. So for this swing, I needed the 4 hour. I could have come down to the 2 hour probably. Yeah, I can see on the 2 hour, maybe even the 30. But I was focused on the bigger picture, being on the daily and the 4 hour. That's a larger frame. So I'm adding extra time since I'm basically going off of candles that take time to form. Moves don't happen overnight, but if a stock has that, you can afford to risk a week of contract. Uh, how big is your account? So the same thing that Jarvis is doing. I'm doing like light sizing on $1,000 account, withdrawing, running it back up, withdrawing. There's never like it's never I'm gonna double it this week. I'm gonna double it in 2 weeks. I'm going in every day playing the chart. Whatever happens, happens. If I can double it in 2 days off swings, I'll just withdraw the money right then and there. But I'm doing this to giving plays to you guys through that account, showing that you can grow, withdraw. You don't need $10,000 to make money. It's just proper sizing. What was the last question? Support and resistance are not the same. What's supply and demand are also not the same. Support, resistance, demand, supply. It's just other terminologies. I don't ever use supply and demand. I just say support and resistance. And I always get confused with which one's which all the time. People in here can probably vouch for me when they hear me say that in class in the past. Support and resistance not the same. If not, then just different. Support, resistance, demand, supply, they're exactly the same. It's just different terminology. That's all it is. Can you check if Boeing is valid for a breakout tomorrow? It's finally over. This is going to be a good example to talk about because I was talking about this to people on the support that it had, and we totally missed it because I think it gapped up overnight. We were going to catch it the next day. When looking at the bigger picture and seeing a descending wedge, do you ever play those smaller patterns that are forming inside? Like, oh, should I go back? So this person's asking about playing smaller head and shoulders within the patterns. When I'm focused on like the move, I don't want to play stuff like this. Even though it's a valid setup, I'm not interested. I'm focused on the touches. That's just what I use for this specific pattern. If I was like only looking at forward to play inside the triangle, not the bounces, then I'd be doing that. But this is one of those stocks I was literally just sniping every time it came down, got calls, wrote it up, sold whenever. If it hit the top, I'd get puts with time, hold it, sell whenever, get calls again. So this was just rinse and repeat for me. I would set alerts within a 30 cents to $1 of where the bounce should happen. So then I'd start watching it. So the whole time this is moving, I just don't even have it on a watch list. I'm not looking at it. But once it hits my zone, that's when I'm like getting ready to enter it. Okay. Why is this lagging like this? Yeah, Boeing. There we go. Okay, so going back to Boeing, see if the chart works this time. There we go. That's Boeing. So we're curling, obviously. When I'm looking at this, I'm focused on heavy levels. So we had lower highs here that eventually broke downside. Now we're kind of rejecting the same areas when they contest, not the dead point, like to the decimal, $231.24. Well, me, if you want to pinpoint this high, that's fine, but I'm looking just for the area. So I know when to start watching it. Then on the smaller frames, I know in this area, rejection is normal for it to happen, like it kind of is doing now. Not saying it's going to drop, but I have my eyes on it now. At that point, I go to the lower frames and I look for setups that could be happening, whether it's if I want to go hourly, 30-minute, 15. Personally, I try to stay away from under the 15 when I'm like zoning out on it. I'm not focused on just like the day of just yet until I start entering or I'm in the play. Then I want to watch the smaller stuff form. Looking at it from this perspective, this area right here. And I didn't just draw that because that was a low a day ago or whenever this was. I was focused on historical first, working my way over. There's a lot of rejections, wicked up, came down, rejection, same wick up and down. Strength was never present to hold it above, even when it tried. So going off the past time that it has been in this area, broke above, pulled back down, this is going to be a heavy rejection when we get there again. As we got there in the middle here, pushed up, came right back down. Rejected, rejected, rejected. Price action could never hit buyers enough to put it even close to that zone again. And if you're like thinking to yourself, well, why specifically there? Why not down a little bit? You can put the zone wherever you want. It's just the idea of if it is a little low like it is here, this dip didn't technically hit where you wanted it to first before getting your entry going. But I wasn't focused on this dip. Even if I was zoomed in to right here, I can't see what's happened recently. I'm still putting this around this area. I know it rejects when it pops up, it comes down. This is going to be a heavy rejection when it gets there again. If it breaks above, it could hold this massively as support. Sure enough, it came down, bounced up. Like that's kind of what I see for Boeing. The play that I was looking at a few weeks ago, I was looking at it down here. When it held this support, the wicks, the majors, whatever, every pullback to this zone, I'd wait, see how it reacted, wait, see how it reacted, wait, saw how it reacted. I didn't enter on the first one right here. It didn't come down far enough for my liking. I think I had my highlight at the time down here. So I was waiting for another heavy sell off, a quick little extra share drop. So now obviously I raise it up because I'm respecting price action. It's not only down here in these areas. When I pull it up here, now I can include other areas that came down, even if they weren't as low as the bottom ones. So as this was pushing up, I tried to catch pullbacks. I would miss out on pullbacks and half the time get scared. I didn't want to risk it because I was kind of hesitant. Like, what if this does fail? So I didn't trust a few setups, which is normal. You're not going to trust every single setup, but as you do it, it's kind of just like a motion. Come on, move up. There we go. So a lot of zoning. These same colors are annoying. So when you're looking at the one I put in the middle, you can raise this down. You can bring it down. You can bring the highlight down to this area. A lot of rejections, wake ups. So with the entirety of this, you could use something like this. So if this is kind of too hard to find major support, major resistance within, if you miss the bottom, you just don't touch it. If you want to chase it, you have to understand, okay, if I'm buying and I'm trying to catch the breakup, the upside push, I'm going to be in the smaller frames. What's going to have to happen on the way up? Like what zones are heavy? The same way on the 4 hour how I chart, I come down to the 15, I do the same thing. What zones on the smaller frames are heavy? As this moves, I'm using those. Having the big highlights, I already know from a larger frame why I put this here. I know on a larger frame why I put this one right here, but I can't see that on the 15 if I try scrolling back. I got to keep going back and back and back. So I have an understanding. As this is forming, I'm going to take away the highlight on the bottom. This is when I start incorporating trends of higher lows, higher highs. We have this formation right here. Even if you didn't know this dip was going to happen, and now I'm kind of upset I missed this because it's kind of textbook material. You're drawing a trend based off just these two bottoms right here, or you can even say three. So when I do trends, I'm not focused on these wicks, the bottom wicks. I want the overall area of where the stock was trending the most. I don't just want a pinpoint of this kind of stuff like this. Like only the lowest points I'm going to chart. I want to get an overall respecting price action that either rides this, it has a lot of momentum. It can wick below. That's fine because it pushes back up. I understand that. So if I would have just extended this, came down, maybe it didn't hold long enough for you to enter. Obviously, it was pre-market, so it pushed up and open. But you also have this zone right here. So you have two convictions going off a trend of higher lows while also using, historically, you know, this is a major rejection. Now that we're above, this area logically should hold for calls. It should hold with buying pressure. So you're entering based off the chart. Boeing right now can break out. If you look on where it's at, it's rejecting this area right here, kind of that previous shoulder. If that breaks upside, you have the top of this head area. And at that point, that's when you can use the larger frames and see like where's the gap fill on the upside. If you buy calls at the top break, where's the gap to where you start trimming? What's the plan? Figure out the plan, know where you're going to sell as it rises, whether it's in the moment you sell, but you understand if this rejects, I have to sell here. If this pushes higher, I can trim at this price action. However you feel about that. I'm pretty sure there was a few more questions after that Boeing one. And if not, do you guys have anything else? And I'm going to move on to Neo to kind of explain this in the same sense. What's the best swing play tomorrow? I have no idea right now. What is happening to SPC? Tesla. Let me look at this chart real quick. Is it like up after hours or something? Oh, my bad, guys. Guys, when he typed this, he said, what just happened to SPCE? This thing just rocking like $2 at the high practically. I'll look into that afterwards, see what the news is. So Neo, someone said Tesla chart. Are you referring to Tesla as the, is that a good swing trade? Or swing play for tomorrow? When you say swing, do you mean like 0 DTE and hold all day? Or do you mean like actual 4+ weeks out that you can hold like in the next week, the following week? What were you referring to with that? I wish I would have caught this when I wanted it so many times. Okay. So going off Neo, make sure no one asked anything. So going off Neo, I was watching this kind of the same formation that Ford had. It's just a falling wedge, not like a squeezing on the side, symmetrical triangle, whatever you want to call it. Lower highs, lower lows. I was looking for that squeeze on the upside. Falling wedge is usually bullish when price action aligns. As this starts to curl to maybe have a double bottom or form those higher lows on the upside. So when this came down, missed my entry, started to push. I didn't want to chase it. I'm one of those people. I don't chase plays. I just readjust as it moves. So missing the entry where I initially wanted it, hold up. My first rejection, if I was in the play, this is where I'd start trimming. And that was around $8.79 a share. When that breaks upside, I want to see a recontest of this trend line anywhere in this area. It doesn't have to be a pinpoint, like it has to touch the white line. I just want to see a recontest in this area and see if it flutters around for a day or two. This is my low risk for calls. Looking at it now, you'd say if you would have played the breakout, you would have made a lot of money. Going off probability of playing that 10 times, are you going to make money on that the amount of times you need to break even? Is the move going to be big enough 5 out of the 10 times to give you a return that's not going to be as massive as the loss if this fails rejection? Because hypothetically, if you enter off where this blue highlight is, you're buying right as support for calls. So if it breaks downside, you're basically selling. But if you chase this on the upside and it rejects, you're going to be possibly zooming out to try and find a reason to hold. Is there a level that I may have missed? Let me find something to like not feel bad if I hold this and I lose more. So you're looking at it now. Oh, geez, the first support's basically 80-cent drop, which for this kind of stock, that's a lot. Can you hold that drop if it doesn't work out? And if you are correct, it does break out, you're going to trim, and more than likely, you're not going to catch the whole move. So can you handle that from an emotional standpoint? Can you understand you're not going to catch the move? Are you going to be upset? Like say a contract, you sell it 8.0, you bought it for 4, an hour later it's at 12.0. You only size for 1, so risk-wise, if you bought the breakout, anything can happen on a pullback. You sold only because you understand the risk that comes with that. At that point, you have to accept what happens. Whatever happens after that sell, you can't let that change the way you trade of, oh, next breakout I enter, I'm just going to hold because I missed the last one. I play it safe. When plays go in the way I hoped it would and I don't enter, I don't chase them. I watch them and readjust. So now looking at Neo, my first PT was the yellow highlight. Next PT is roughly $12. If we break out here and we pull back and kind of like hold for a few days, I can enter this for calls, catch the gap fill that I want to the upside. If it fails and it drops, I can sell right away because my risk was literally where I was buying. So I already knew ahead of time, okay, if I size light, play a month out, 2 months out, however long I think it could take going off historical movements, it takes a while for the stock to get going. Has a few pullbacks, consolidations, and it moves up again on the next leg. So playing 2 months out, you understand if this drops a little bit, you may be risking, say a contract is 0.8 and the risk is 0.15. So you know right away, okay, if I get one contract, my risk that I know of already, if I follow my plan, is a $15 loss. What's the reward now? Like, where's the first rejection? You start trimming. If you're up in profits at a certain area, would you get nervous and just want to trim to secure profit? At that point, you decide. For me, I just trust the chart and I'll trim or sell the whole position as I see the movement happen towards my levels. And that's my risk lowered. And then my reward is basically in my favor now. If that level breaks where I enter, I'm out of the trade. If I want to hold it and see what happens, I can. But did I tell myself that before entering? I try and follow my plans as much as possible. If I miss an entry, I'll wait for the next contest on the upside when it has a pullback. Let me pull up a Tesla chart real quick. So Tesla for a swing, I saw you said 1 to 2 weeks. If I saw that right, yeah, 1 to 2 weeks. So I'm on the daily right now for Tesla. If anyone does, I shouldn't say if we do, I don't usually trade Tesla. If we break above and have a pullback and kind of just like zone there, hold, kind of the same instant. I gotta switch to the 4 hour for this. Give me 1 second. I need pre-market and after hours. Here we go. So when we're looking at an area similar to right here, I can actually move this back a little bit. So we're focused on this. We had a rejection back here, broke above. So heavy buyers came below, heavy buyers back up. It consolidated and held, pulled back, held, finally broke through, trying to break this area. Anywhere in this area is heavy. So on a pullback, see if price action starts to curl, you can use that in your favor and enter. Even if it doesn't hit the yellow, that's going to be your risk because that's what has to hold. If you wait for the breakout, you would have made money, obviously, but not every breakout, like back here where my cursor is, not everyone works out. So I'd rather buy in at the curl, see it push, trim along the way. Breakout finally happens. I'm already in, possibly with runners. If I want to scale up or do whatever with my position, I can manage it, however, because I was ahead of the crowd. So a pullback on Tesla right now. We had a pullback. We're pushing upside, trying to pull back slightly. Could this have the momentum to carry it? Could this lower high be forming for a slight downtrend? Could Tesla be forming something like this? But also we're still in a higher low on this side. So we're kind of squeezing on the falling trend and this rising, where this blue highlight is. So it's kind of forming sideways triangle, whatever you want to call it. I don't know the exact professional terms or anything, but price action squeezing, lower highs, higher lows. It's on trends right now. So it could be a quote unquote bull flag? Could it have a slight drop off to the support at the first lower high that was starting down here? Could it liquidate people? Not liquidate, but force them out, liquidity grab and shoot back up. That's how I'm focused on this stuff. If Tesla breaks the previous lower high, more than likely a lot of people, I'm gonna let me delete this one. More than likely a lot of people, when this breaks, they're gonna get puts. I'd be focused on, we have a heavy support zone slightly below this break. So if I do play puts, this is going to be like the hesitation zone. Like if this does break when I'm in puts, oh, I'm safe to hold. But if it starts to do a little up, down, slightly push up again, you start to get nervous about that. So I'm focused on calls, knowing, okay, if this holds, this could be a nice switch up, break support. People start to chase, liquidity grab to get cheaper shares and send it right back to the upside. So looking at Tesla, I personally, if we dip down to this area around 242, that's a safe entry for calls in my personal opinion. Because if we do push back up and at least contest the high, that's a 20-point move on the stock, which is pretty good. That should give a good return, even if it's a week or two out expiration. If you go too far out with the contract premium, you may pay less, but the risk is going to be a lot higher because farther out expirations, while being far out the money, theta is going to destroy you. Obviously, the closer you are for farther out expirations, the contracts are very expensive. So maybe Tesla isn't fit for your portfolio for a swing. So you have to wait for this to gain momentum and then play into the volume surge before the actual contest of the breakout happens. So it's all with patience. Playing setups on zones, low risk is all up to you. It's hard to do and comprehend the fact of I'm buying calls at the bottom, where you're usually telling yourself or your mind saying, oh, if this breaks, we're going to tank. Like you have to get puts. You don't want to listen to yourself. And this is when the whole psychological factor of trading comes in. Algos feed off these zones. This break on this trend, pullback, liquidity grab possibility, they understand retail. If they're in calls or shares, if they get faked out, they know they're watching these trends. They know patterns. Algos know how to figure this stuff out. They're trying to get us shaken out to load back in. That's what pullbacks are. That's all pullbacks are. People chase the breakout, expecting to continue going. It pulls back. They sell for a loss. Big boys buy it up, or people that wait for the lowest risk, they're just waiting for a pullback. They're not chasing. They're just anticipating. As levels form on the upside with trends or the downside with trends, you're just readjusting your chart. You're not changing anything. And that's when execution. Do you trust it? Do you actually want to enter and see what happens? Is the contract too expensive? And maybe you just want to wait a little bit to see if the chart forms a better entry point or a pattern. Does that make sense to everyone? How weird does it sound? And you guys can just say yes or no. Is it weird to get calls at the bottom? Like, I know you see people do it before. Like, is it difficult for you? Do you see people do it and you're like, there's no way it's going to hold? And then when it pushes, it's like, man, I got to get in calls now. Like, how do you, like, what's your style of trading, I guess? See if we can get a few people responding. You like breakouts, you like swings, you like playing a certain pattern, trends. So what about 247.3? Yeah, so you can do an entry at 247.3. That's when understanding like both sides of the trade. Logically, this should bounce if we pull back because that's the first like support, quote unquote, that has to break to the downside. So if this doesn't hold, you could hold and see if the level below that holds. My risk I'm taking with possibly missing a position, I'm not going to buy this support. I'm focused on the main one because if this breaks, there's a gap fill on the bottom. There's not much holding this back from that heavy day we had. And then this is now going to get filled. There's no price action other than upside. So I tend to wait for the major fills and not just how when people chart 6 different things on a chart like this, it's like, oh, I'm going to enter on this one and it breaks. Oh, I have a level here, so I'm going to hold and see if this level shows strength. Oh, this one breaks. Well, my last support's only right here, so I'm just going to keep holding. I only chart like the major zones. And if I'm on a chart that doesn't have much, I don't usually even think about trading it. Man, you guys said a lot. I like bounces off key levels. Smart. Pull back to 13 EMA. Pull back to 13 EMA. What time frame do you usually use? I like to hear about new strategies people use. Breakouts and bounces. I like to play reversal and gap. Gap fills are my favorite, especially on the larger frames when they happen. Adrenaline pumping. SPX QQ chart still uptrend. Let me pull up. I feel like everyone was watching SPX, so I don't have to really chart that. SPX is definitely in an uptrend. QQQ is what I have to pull up because I don't know if Tech did anything different. Are you still holding Baba? I never alerted Baba. And do you ever trade NDX? I traded NDX one time, never again. That was probably the craziest thing I've ever seen. Enter the bid and immediately you're down 25%. I got in profits, I got right out. But if you hit it, obviously you're golden. But take SPX times 10, that's NDX. Spreads are like $200 sometimes. $100, 2 minutes with 13. 2 minutes. So you're a scalper. Okay, 2 minutes with a 13 and the 48 EMA. There was one. Okay, QQ. Yeah, so the 2 minute with the 13 and 48, I have a strategy for scalping that I use with the EMA 9, 21, and the 50, 55. And I'll use that on the 2 minute and the 5 minute when I'm scalping. That strategy is pretty effective when stuff like trends are in play. Okay, so obviously we're in an uptrend. So let's see if there's a resistance coming on QQ. So we're literally attempting to break out of, I would call this a cup and handle. The handle may not form. This could just send like Tesla has been. But overall, we're at a logical chart resistance. Going off mindset, how most people are, oh, if this breaks, it's going to go higher. Look at all the strength. Going off the chart, this is a resistance. I'm not saying it's going to reject. I'm not saying tech is going to die down. But just going off what I visually see, not putting my emotions into the idea, logically, this should pull back or at least consolidate. But yes, the answer to this, it is an uptrend. If you're looking at it on the smaller frames, you may not even understand what could be happening soon with the rejection. But going off this, it's just straight upside. If we're charting this rising wedge or anything, we can put a line around here. Not really one to put on the bottom. You can do something like that, but it's kind of ugly. So more than likely, if you're looking to get Qs or anything, calls or puts, pull back to this area will be nice, but that's a $3 drop. Anywhere in this zone. Once we broke out, we had a slight pullback here on the 30-minute wick. It didn't come all the way down, but buyers were instantly present, pushed it right back up. Also realize if the market drops, QQ will also drop. So you can't just trust this level like, oh, it touched, I'm going to enter. Then you sell right away. Wait and see what happens maybe. If you enter right away, you have to understand you didn't really wait for conviction to hold this or even enter. You're going in off the fact of, oh, it touched my highlight, let's get in. So it's all in the moment. If you want to size very light and average in if you can, buy one contract, let it work its way out, and you're not forced to sell if you're down 30, 40%, even though it's holding. Consolidating, theta's losing value. So you can hold a very light starter, one contract when you usually size 10, use that to your advantage. If it does drop and push back up, you can always size into that play from what you originally wanted to size in with the total of 10 contracts. While we're at it, I don't think you guys have many questions. We have a few minutes that I'll stay on because we had that interruption. Is there any chart specifically you want to look at, or do you just want to see what I'm going to be watching? I know people out here that's like, I would say shops on the verge of breaking out. Adobe. What's the symbol for that? You know, I think I can just type it in. I don't think I've ever looked at this chart. OADBE. I've seen it, but never looked at it. Dang, 490. Don't tell me this is all-time highs. Okay, I don't know what to say. So this has been moving ever since QQ's been moving. From what I see, at least. This thing is pushing. You guys flooded this. Oxy just off memory, we should consolidate and have a slight push, I want to say. I think we're close to a resistance, if I'm not mistaken. Adobe. Someone said Amazon. I can do that too. So just going off Adobe. As I do this, I can quickly do it and not say much, but you guys should get the idea of how I do it. So I don't want to say effortlessly, but just seeing a zone, boom, put it there. A lot of people, they just see this level here, like, oh, it's out in the open. Trust me, that's definitely a zone. But what does it take to get down to that zone? There has to be something in between, because a 60-point move doesn't just have a gap fill unless there's a major earnings report that made it shoot up high or down. So you're finding levels. Obviously, if we hit the 480 and drop below, don't think we will, 444 is going to be that pullback. So I'm focused on this. Resistance right here. We're not quite there because this can even push a little bit higher. So anywhere in this area. Yeah, and even comes back to this part. So the resistance is going to be basically 25 to 30 bucks upside still. So still trying to fill that gap to the upside. Pullbacks are normal. I'm not saying it's only just going to keep going up from here, but just seeing that, that's what I'm thinking. This is my first time ever seeing the chart. For the people that come to class often, do you prefer Trading View when I do this, or do you think the other one I use is better? Just going off visuals and comprehension. I want feedback on that too, so you guys get the best stuff possible. So Shop is in the same situation that AMD is, but Shop's already broken out. This is what I'm expecting to happen with AMD. A curl at the bottom of this handle for the cup, and then send to the upside to contest and fill the gap to the upside. Shop right now only has a fill. There's a level around $71 a share, and then $33.70 at the highs. I'm just going to keep going in order. Someone said Oxy. As I'm doing this, keep putting stocks, because I think the minute I get to the end, I'm just going to head out since we're past 9 o'clock right now. Yeah, so Oxy's holding, but it's trying to form an uptrend. So we got an uptrend right here on Oxy. Heavy support almost everywhere below. I don't want to put this up here. When I'm charting, I'm not focused on, like, I have to put it right where it's heavy. I want to catch like those liquidity grabs, pull back heavy, shoot back up, comes down, consolidates a few times, then pushes up. So I'm looking at below here. Going off the bigger picture I have, this could be forming an inverse cup and handle that could go to the downside, but also we have a major support here and trends are switching bullish. We have higher lows forming. So now I'm going to come down to the 30-minute, and I understand we're holding here. Logically, if you enter calls, this should go up, and if it doesn't, your risk is going to be this drop right here. If you add time where a dollar move is not going to drop you 20% plus, you can buy one contract and hold. Your risk is going to be, if you follow the plan, a drop down there, and the reward is more than likely going to be the gap fill to the previous higher high. And if that breaks out, then you have room to the upside. So your risk to reward is right here. There's going to be a lot of chop in the middle, but it should just free ride up. If it can hold this and curl, hit that point. Amazon. I have this chart already, so that's perfect. So we're at the main level. I said break and hold. If we hold 125, I can go long calls. It's looking strong. We're getting a lower high forming on the 30-minute, so this could pull back a little bit, but we have that heavy zone at 125 that I have charted. If we break 125, I want the main gap filled down to 120. In the middle, if we get a nice consolidation, I would not mind taking calls at like 123 area. Both seem fine. Okay. So let's show us what you're watching. Let me finish you guys first. PLTR has been on a tear. I missed the initial entry on this, and I have not bought it one time on this run up. It was like literally 12 bucks not even a month ago. Yeah, this thing's been on a run. So I was trying to catch this back here, and I literally missed the entry barely. I didn't just want to fill. I was trying to catch it on like a cheaper contract. I was basically greedy, trying to get the best fill. But this held support, and if you have runners, this is when the runner situation comes into play. As this breaks, you sell, you hold runners, pull back. You're not worried because you're probably still up 200+%. The huge breakout happens. Now we're in a gap fill on the larger frame, and you can just hold runners up as high as you want. This stock has literally gone 100% since May 5th, 100% on stock shares. So if we looking at the larger frame, like where's the next gap? Could it pull back? We had a heavy resistance. We had a huge liquidity grab right here. There's not much in the same area, but if we pull this up slightly, we held for a long period of time before the breakdown right here. This is about 2.5 weeks before it broke downside. Now we're slowly approaching this resistance that should act in the present price action. If we hit here and reject, we should fill a gap down to here where the trends kind of broke and the daily started to kind of scatter. So that's kind of the gap fill right there, $14.50 up to $18 almost. Sophie, I think, I'll look at Sophie. I think Jarvis gave a breakdown on that earlier. And I don't think I've ever charted this before. So this is running to a lot of small caps are in gap fill territory right now. Money's being filtered elsewhere. So a lot of these small $6 to $15 stocks are going to have heavy runs. It's a very nice support right here. Well, before it broke out, resistance obviously, but a lot of wicks and liquidity grabs in this area. And then resistance we can kind of use where it tried to break back upside on a triple top almost, which is also current price action tap out. If we break that to the upside, we could more than likely, I'd say around here. There was a heavy liquidity grab. If you see this wick right here, and then a huge engulf right after. So that area, you can honestly raise this up a little bit if you wanted to, or just make it bigger so you know this entire zone has like consolidation that could happen. But that's kind of what I see with Sophie. If it can break $10, it has a gap to 13 from what I see. You mean ENPH, or is UMPH a stock? I'm gonna go back to PayPal after this one because this got my attention. Union Pacific, am I looking at this right? You had to have met ENPH. There's no way. Let me go to PayPal. Mitchell, UNPH. Is that a typo or is that for real? Okay, so you're talking about what I was just looking at then. Oh, UNH. United Healthcare. United Health. Okay, PayPal. Crazy because I've been watching this too. So PayPal is in my formation, but I'm talking off what I'm looking at since this is a stock I've been waiting for. Here's a perfect example of what I was kind of talking about earlier. Forget about how this happened before. Forget this trend line's here. So when looking at this stock, you see a curl pushing up, pulling back. You think it's going to hold support. Say you enter on calls here. Like, oh, this support's heavy. If it pulls back, I'm going to enter. If you add time to a play and not just play week of 0 DTE, whatever it is, you're sizing light, you're adding time. This heavy pullback was recovered within the next day or two. And say you size light, you want to size in as this play works its way out. It drops down, you see it curling, pushing, another pullback, now it's pushing back up. If your contract, say you're red on the play, but your entry off the stock chart is above now than when it was for your first entry, but you're still red, you can size into this play as it moves and forms. You can use your initial full position you wanted because the first one was a test. If this held off that one contract or that light sizing, you can ride this up if it would have bounced. That one contract would have made you enough money like to hold the play and make it work. You don't always have to fill the entire position right away unless you understand the risk. Because if this would have dropped, could you have held? That's the biggest thing. So now that we're in this position of forming a little trend line and push, we broke above. I don't want to say the brim, but we had a massive extended handle on this cup on the 2-hour. Now we're breaking above. Are we going to pull back and hold this as support? Could we pull back all the way and ride this trend line? So I'm looking at this to see how price action moves as it pushes higher or comes down. Because when you zoom out, PayPal is approaching. You can use this area. Anywhere in this zone is going to have a rejection. So if we break above this gap fill from 68 or $69 a share is going to fill up to 72, 73. It should easily hit that fill after this major red that it had that push down. UNH. Any other stocks from anybody while I'm pulling up UNH? It's about 9:15, but I think my technical difficulties were about, I felt like it was 20 minutes, even though it probably wasn't. Ooh, liquidity. This is a good example. I haven't even looked at this before. So a lot of wicks down to this area. Going off a question from a while ago, someone asked, how do you know if it's actually going to reverse? How do you know, like, if it sells off, it's going to bounce? How do you know if it pushes heavy, it's going to reject? You don't know. So that's why you have to size accordingly. Do you trust this enough? If, like, when this came down and you saw green after, if I go to, let's go to the 30-minute just to see candles a little bit better. So this day it opened, consolidated, slowly pushed. Are you convinced enough to enter calls on this, whether it's the week of or 2-3 weeks out, and you trust this push back up? If you trust it like 100%, you're saying, if I'm wrong, that's okay, but I really think this can go. You can size however you want, which is, it's going to be heavier probably. If I'm entering this based off, okay, the chart historically does this, but if it doesn't, I can't risk a loss. So I'm going to size light. I'm going to trust the fact it's in the zone. On the larger frame, it's in that area. On the smaller, it's kind of consolidating on the lows. End of the day, it's pushing. I'm going to buy in and swing this. Smaller frames, this is when a lot of people always question when I talk about this. On here, it's kind of like, why are you buying it if you're basically buying it high of the day? For a small trader on like a scalper or a day trader on the 5-minute to 1 minute, that's going to be a bad entry. It's going to make you not underestimate what could happen. But going off the larger picture, this is meant to push back up on a heavy sell-off. I'm pretty sure people looking back at this is like, man, I wish I would have bought that. But in the moment, seeing this drop, you may not even be thinking about, I'm going to enter this and go long. But now that you see it happening, okay, this pulls back down and it holds for a bit, I can enter. But you have to understand, if it rejects here and comes back to the highlight, it may not hold because selling pressure was so heavy and it didn't push it like it usually does on the upside. The retraction to the upside was not as heavy like it usually is. So that's when you have to understand, could this first entry have been a fake out? And that was like my quick gain, like it's pumped $16 from the lows basically. Was that the play? And if it pulls back, is this another opportunity, or could this be a sell-off and the first one was the only entry I could have had? So I'm going to pull up what I'm going to be watching. So I'm going to be watching snow tomorrow because I was watching it today and literally I was waiting for my blue. Let me go into 30-minute for this. I posted this in my signal channel, just like the charting, the TA. I was hoping it would open and have a quick dip and then rip, but it never had that drawback like I thought it would. And I didn't want to enter too early. So without that pullback to the blue highlight I had roughly around 170, 177 a share to start actually like watching it for a buy, which was the previous day. It intertwines with that area. So smaller frames, I have that. Larger frames, I'm focused on. In this area, it respects the price action. So without it having that drop, my alert I had on my trading app, it didn't come through. So I didn't get a notification because it wasn't low enough. So I never entered this, but I saw it break when my alert at the upside for the gap fill hit. And that's when, at this point, I want to see a pullback, see if it can hold that 185 area, because when I go to the 4-hour, that historical resistance is now going to act as a support if it can pull back that heavy. It's literally a $6 to $7 drop. I doubt it will happen, but that's the patience that comes with like what I'm waiting for. If it doesn't happen tomorrow, I may not have other stocks in mind until I see pre-market tomorrow, but this may be my only optional play. If it doesn't align, I'm not trading tomorrow. That's how I trade with almost every setup that I have. I set alerts. When we get to the zone, I start watching it. If it looks good and strong, then I'll enter the position. But if it's very hesitant, if I'm questioning it, I'll just like leave it up and watch, but I won't enter the play. I think that's what everyone had. Are there any questions in general with anything?